after recording all of the transactions for the month, including the adjusting entries, we can compile the entries in one chart, and we'll call that the accounting equation chart. So the way this would be done for a company that didn't just start is you'd have an extra row in here, and basically what that would be is all of your beginning balances. But because this is its first month of business, it has zero cash or other assets. In other words, all of these balances are zero. So the beginning balances are zero, and then you will record each of your transactions, and you'll eventually get down to tallying up all your balances at the end of the accounting period. Now, I mentioned the 4 financial statements. That's what we're going to work on now, and I've color-coded them. The first statement you prepare is the income statement, so that's highlighted here. So we're going to take all of our revenues and expenses and put those on the income statement. So let's go through that here. So I basically have condensed that column so it's a little easier to follow. But here are all our revenues and expenses. So what we are going to be doing is in this income statement, it reports our profitability over the period. Now again, it might be by month, or quarter, or annual. In this case, we're doing monthly financial statements. So we're going to then subtract all of our expenses to get to net income. So again, revenues are the amounts earned when you give up goods or services, and the expenses are all the expenses relate to the costs that were matched with the revenues because they were incurred in order to help generate those revenues. Now you can have, and I put this in parentheses because a negative number would have parentheses around it. That means that if it's a net loss, it means your revenues are less than your expenses and you were unprofitable. So let's look at this here, the way the statements are set up. We're going to go through dig the dogs. You always put the company name first, that's number 1. Then the title of the statement, this one's the income statement. And number 3 is really important, that's the time period covered. If I told you I made $10,000, would you be impressed? Well, what's important to know is, well, what time frame did you earn that over? So that is very important. So this statement is for the month ended. So that's the first few things. Now let's go through the revenues and expenses that would be recorded. Well, the first item, oh sorry, I forgot to mention dividends. I didn't pick that up. That was under the retained earnings column, but dividends are not included in the income statement. We'll talk about dividends later. So now let's go through. The first item here in the column was revenues. That would be your first line. So I put number 4 there because that represents the first blank on this chart that we're to fill out, this statement we're to fill out. I also have down here some other account titles that may be used. In other words, you might see sales revenue or service fees earned or some other account title representing the amount of goods or services delivered. The next line item, and it's always for a merchandiser or manufacturer, not a service organization, but you will next list cost of goods sold. In cost of goods sold, it also might be called cost of sales or cost of services. The next line we have is wages expense, and then below that we would put depreciation expense. What I skipped was interest, but let me talk first about wages and depreciation. What you have in this section of the income statement is your operating expenses, and they vary widely. So these are expenses such as, in this case, wages for the people that have provided services, the equipment that provided services. You could also have utilities expense, you could have insurance expense, advertising expense. All of these are expenses that helped us to generate revenues and to operate our business. The last item here is interest. I put that down below. Interest is considered a non-operating item. What would go down lower is interest, income taxes, or gains and losses from selling long-term assets. this is not inventory, but eventually, like if you were to sell your hot dog cart and sell it for more than the book value, you would report a gain, which if that were the case, that would go down toward the end. So what is the order? You can put your operating expenses in any order, except you always have your cost of goods sold listed first. And then down below are these non-operating items. Again, these are non-operating items because they don't relate to operations. These are related to financing or investing activities. And so they're going to be reported down below operating income. Well, let's talk now about these amounts right here. This is a multi-stepped income statement. And with a multi-stepped income statement, you're going to start with gross profit. Gross profit is the first step of a multi-stepped income statement, and it always equals your revenues minus your cost of goods sold. Okay. The next subtotal or step is the operating income. Operating income, what you're going to do is take your gross profit, which is the 300 here, subtract all your operating expenses, which in this example were wages and depreciation. And then the last, some other examples could be utilities, rent, insurance. So the number of line items here can vary by company depending on what kind of expenses the company incurs. And typically the ordering is companies will list them from large to small, but that's not set in stone. The last item is net income, and that's where you're going to take your operating income, the 170 here, and subtract all your non-operating items. And again, those were things like interest, taxes, or gains and losses on things you don't normally sell. And that is our multi-stepped income statement for Dig the Dogs. So to summarize, you take all your revenues minus all your expenses, and there is a certain order, and we have subtotals to help us provide us some information.